Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, December the 5th, 2025. Let's get started. We will sort off by week. You can see silver here has definitely been making headlines, outperforming gold in the recent, certainly this year. Down on the bottom, we've got bonds. We're going to talk about both those things and more. Just a reminder, pause your video player at any time if you want to dig in and get some more information. Toronto housing. This is interesting. Look at the price of detached homes here. Peaked out a few years ago, but looks 1.65 million down to 1.3. I think it's about 25% or so. A lot going on in Canada, and I think economically speaking, the data just continues to look a little weak. That is not the same as the stock market, which in this case, you can see here on the left, Toronto stock market making new highs right there yesterday, ahead of the US markets. There's the NASDAQ and the S&P. We did just have an RSI 5 oversold sell-off. Again, this is an uptrend, right? So in uptrending markets, we want to continue to add risk into pullbacks. That's exactly what we just had. I'm going to dig into Toronto here a little more. Let's first look on the left side here at Toronto, stocks versus bonds, clearly new highs again. And on the right side, we've got stocks versus bonds, new highs again. So remember, even though Bank of Canada, Federal Reserve, all these central banks are talking about dropping interest rates and everyone's excited, that is not happening on the longer end. In fact, there is lots of activity happening, which we will get to in a moment. Let's look at some ups and downs here. So even though the Toronto stock market is at highs, there's the top two, there's two stocks, I should say, in uptrends. Those are two banks, that's CIBC on the left top and Royal Bank, both making highs. I put a green circle on there only to show you that was the bottom of the stock market, the bear market end. You can see both of those stocks went lower and really didn't start rising until 2024. So they've been a little later starting here, but that's also similar to Toronto itself. But if you look on the bottom, we've got a couple of the telecoms, which most Canadians would know. That would be Bell Canada and TELUS on the bottom right. Those are essentially sitting at lows. TELUS particularly is sitting at multi-year lows, very, very ugly. And so again, even though some stocks are going up, they are not all going up. And so that's the way a market is. Let's look at the TSX again. Let's look at dividend stocks, then bank stocks, materials and energy in order. And in the bottom panel, I really want you to focus on the relative strength here. This is versus the Toronto market itself. So what this means is that in the top left panel there, you can see dividend stocks in an uptrend, that's for sure. But in the bottom left panel, you can see that they're underperforming the Toronto stock market. So remember, as investors, we can always decide whether we want to focus in and take specific risk or specific focus, industry group or sector risk. But at the same time, really what we should want is either to diversify into something broader if that's where the opportunity best lies, because the risk is generally lower. You can see banks outperforming over the course of the last year and a half. There's the materials outperforming, and the energy stocks have been really, really dismal, even though they are just popping up recently here to kind of a breakout territory. So look again at what's going on in Japan. And this is actually definitely significant. On the left side, Japanese stocks in an uptrend. Okay, that's common. There's lots of stocks in uptrends, most. But in the middle panel, we've got bond yields. That's 10-year bond yields breaking out to major highs here. This is very significant. Again, there's been a lot of money borrowed in Japan. And so again, bonds are inverse of this. And I didn't show it here, but I showed it yesterday on X. Bond yields in Japan essentially have been outperforming US stocks, which means if you've been short Japanese bonds for the last few years, you would have done better than the bull market in stocks. And then on the right side, that's actually US dollars showing strength against the yen. So the yen has been weak, bonds have been weak, and stocks have been strong. That is actually quite common in many places in the world. So we can focus on one of the Japanese large caps. This is SoftBank. On the left, we got monthly, middle, we got a weekly, and the right daily. So that's the same stock on different time frames. And really, I want to point that out because we can see how zooming out on the left, we can see uptrends, we can see higher highs, higher lows. On the weekly basis, we can see a breakout over that last kind of 4 or 5 year ago level, and we've just pulled back here on the right side. You can see that's a 47% pullback. Again, just given what this is, and given the kind of theme of global equities, if you will, I found this interesting, and OnSync took a position from this perspective. Let's look at one of the crypto ETFs here. These are very volatile areas, and again, certain our clients are familiar with this one, BitQ. This has gone through a lot of sell-offs, not sell-offs rather, but corrections really over the course of the last several years. I've shown the magnitude of these corrections, and I've shown this before, and we've just had a 40% sell-off. Again, from that perspective, that can sound like a lot, but in context, it is an uptrend. It is higher highs and higher lows. And so sometimes to go and maximize the opportunity over the longer term, we want to go and be able to weather the shorter term fluctuations and counter trend moves, if you will. This continues to be very important to me. This is ARK Innovation, the ARKK. Sorry, I've got that mislabeled there, but that's versus the US stock market. This is pulling back to the breakout level here, but this is meaning these growthy stocks, so these innovators, these kind of almost speculative growth stocks are outperforming the market, and that is very, very bullish, I think. think underneath, it does say that the market is certainly not acting in any way defensive. Let's look at a couple of stocks here, trending basis from the InSync universe. These are in the All in Sync pool that we manage. On the left side, Broadcom, very familiar. We've all talked about this lots of times. This stock made highs recently. In the middle is Advantest. This is another Japanese stock actually that has been definitely outperforming over the longer term. And on the right side, we've got Google, which has just been, a very, very strong leader here in one of the biggest names there is. Another biggest name, it's Tesla, 10th biggest stock right now. And again, I just want to point out, this is a chart here going back, I guess, 10 years. You can see the rally that took place late 2019 to 20, right? That caught a lot of people by surprise. That really brought the stock to life. And really what's gone on here over the course of the last several years is consolidation. I put a green circle there because we are very close right now to, what could be a very significant breakout. And I think when we get through, the 470, 475 area, particularly the 500 level, this is a stock here with a lot of things going on with it. And again, I think we often misbrand things in our heads. We think about things as an investor, oh, they do this, they do that, but there's a lot going on here. I focused on a couple of those things you can see on the left. It is certainly not just vehicles. There's a lot going on here with batteries and autonomy and whatnot. So again, I think this is a stock we want to continue to pay attention to. Let's finish off with Sector Watch. There's the energy stocks up at the top. There's actually the bank stocks up at the top, the short, intermediate, and long-term trend. And again, the defensive stuff like the utilities, the recent rally in healthcare, which has been very, very strong here, has had a bit of a week off, and everything in between. I hope this has been helpful. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.